Hey guys, welcome back to the Capital Mindset Show. So yeah, this is let me know if there's any mic problems this time. It should be working at this time, but we have a new setup and all that. All right, so let's actually begin with all the recent news. I mean, we know that, for example, Starbucks, I think some of you have seen the Starbucks video that I put out today. Starbucks coming down today, downgrade from I think Webush. Statements regarding the buyback program, basically, and saying that, hey, well, they're stopping the buyback program. What's going on with that? That's going to deteriorate some of the value, right? Some of the value that's found in Starbucks. Well, I saw some of your dialogue back and forth in the comments section regarding this, and I think we've had a lot of conversations. You as in the subscribers, and me, right? Oh, and yeah, that's right. It's urban mindset today. So yeah, just a quick commentary, or kind of like I would like to hear your guys' thoughts. If you guys weren't able to share your thoughts, what do you think about the buybacks and Starbucks suspending it? Do you agree with it? Do you disagree with it? I already stated my opinions on it, but I'm happy to hear your guys' thoughts. And yes, I am a bit late. I was 2 minutes late, I believe. Having some issues setting up this stuff because it's all still new, the setup, so still getting used to everything. I got my old rig back there, so that's going to be for when I have if I ever need someone to help me out there. Yeah, well, here we can let's here you guys can see my house. No, I'm just kidding. Look, now we're in my house. Totally my house. Yeah, I would not, my wife would not like this layout. I mean, I don't find anything wrong with this layout actually, but my wife's more of a modern fan. She likes modern stuff. But you know how it is, guys. When you're married, you don't get to choose how your house looks like. That is power delegated to someone else. Well, BP. Okay, this is a good comment. This is a good comment. We got a good comment here. I think Starbucks is a liberal soy boy company. Okay, I mean, sure. Also, I think like every wife out there, because I don't know, I don't think my wife is a liberal soy boy. But I understand the sentiment. That's funny. All right. So yeah, Starbucks. I mean, I would like to own the company. It's just not at the right price, and I think I've discussed that today in the video. The buybacks for me don't really make a difference. I think Howard Schultz is doing a good thing, and again, the implications are that what is he saying when he's like, "Oh, we're going to stop the buyback and we're going to focus that money on the business"? Well, that implies that the previous CEO was not doing that, and I think I made the case, at least in that video, that the buyback was done through debt issuance, and that's inherently, again, if buybacks are not executed properly, a destruction of shareholder value. And on top of that, if you add the probability of it being executed properly being low, and then you're taking on leverage in order to do the buyback, then you have a recipe for disaster longer term. I think Howard Schultz, it still hasn't been permanently destroyed or anything like that, but Howard Schultz coming, I think, probably is a good thing. I think the other guy, I don't want to smear his name or anything like that, but I think he was coming at it from a different angle that I wouldn't like it, and so I think Howard Schultz also didn't like it. Now, let me know your thoughts, why you think he came back, because obviously we all have differing opinions or different perspectives as to why Howard Schultz will come by now. And I think this is his third time. I think one of you mentioned that as well in the comments section. So let me see here. You think it's smart suspending the buybacks? You see, I completely agree. So in the sense that they are preventing or stopping the buybacks, they're going to take that money and then again put it to the business itself, invest back in the customer. I think they should focus on ways to keep costs low, or have an ability to control costs a little bit, especially in this environment. While the consumer has been showing the ability to kind of absorb the costs of the coffee. We want our businesses to try to improve on those efficiencies in order to then kind of have that flywheel effect of value creation. So you pass on any value to the consumer. And we discussed that in the video on Amazon, right? So you can either keep those benefits to yourself, and then that in the short term is good, long term probably is not that good. And then if you pass on those benefits to the consumer, you build up that consumer base, and actually you will gain market share in that aspect. But if they could try to invest in that avenue. Of course, they're not the discount coffee chain. I know some of you are probably saying that. I haven't checked, but if some of you are saying that, I completely agree with you. Starbucks isn't a discount coffee chain by any stretch of the imagination. I think if you consider McDonald's a coffee shop, then they are the largest. And I don't think I forget I think it's called Pret something in New York. If you guys are from New York, you guys probably know the name better than me. But McDonald's actually owns a coffee chain that competes with Starbucks. I think it's called Pret. I forget the name off the top of my head. But regarding Starbucks is the one that people mostly consider the creme de la creme of coffee chains, not your local coffee shop. We're not talking about that one. I know that some of you might have a very how do you say, you're very loyal to your local coffee shop. And I think Starbucks is that consistent experience globally, and that's what people really go for. This isn't a video to really just talk only about Starbucks, by the way. We're going to talk about the other topics, but just kind of touching on Starbucks, and then we'll put it in the cabinet or the filing cabinet. All right. Yeah, we have Pete's as well. It's not Pete's. That's a different one. The company I'm thinking of, I think it's called Pret. Let me actually text my wife. She knows the name. Let me quickly shoot her a text. All right. I think Pret something. She's the one who was like, you have to try this. All right. So, yeah, hopefully my wife texts me soon, so she'll get me that name. But yes, I'm sorry again for the time of this live stream. I know some of you. Oh, here we go. See, quick. Pret Manger. Okay, yeah, it's like some French name, but McDonald's owns it, right? So people don't know that, and obviously McDonald's wants to not keep those brands separate, but that is actually a viable competitor against Starbucks. They're very good. I had it in New York with my wife. They don't have any where I live here, so it was really good. It was really good, actually. Between the two, and well, let's be frank on cost. I think Pret might be slightly more expensive, slightly. I have to actually look at the menu items and see, but you guys can look into it and get that information better than I can, because I won't look at it right here. But yeah, it's Pret a Manger. So Manger. So for you guys to look that up, but that is again, owned by McDonald's. That's why I'm only mentioning it. But of course, there's Pete's. Pete's is another one, but that's I think mainly in Europe. And then you also have Costa Coffee, which is owned by Coca-Cola. Not many of you might know that, but Costa Coffee is also pretty good. And then also in Europe, you can find Cafe Nero. And I'm talking about coffee chains, not your local coffee shop, guys. Okay, so just so we're also clear on that. And let me start answering some questions. I see I got some questions here. Yes, Elemento stock, Starbucks stock is also expensive for me too. Okay. You're sitting at work. Well, I guess because the time, right? Because the time difference. But again, I apologize for the time that I'm having this live stream. It's because this is where work allows it to be, and I won't probably make it to the 2 hours because I also have to sleep. So, but yeah, you want at least a 10% yield. Well, I don't know if we're gonna get that. Yeah. All right. So what's this? Oh, thoughts on cooling / crashing the housing market, commodities staying higher longer. Fed keeps raising rates until a breaking point for flip flops and another fake bull run starts. Okay. So these macro questions. The thing is, I'm going to tell you an answer, and it's going to be wrong, because the one of the many aspects of trying to derive where the macro environment's going to go is all the little factors that you miss out on, because there's so many little factors that actually play into the end results. But I can say this: what I've been saying from here and for a while now is that I would not be surprised if there is a slowdown, right? So we've already had the whole discussion. If you've been following the channel for a while, we talked about the liquidity crunch. I kept using that word. I don't know if that word came from me originally. I don't think so. I think definitely some other people have used that word. Seems like it would be a very common word, but simply meaning that liquidity within the financial markets would tighten, and we had the Federal Reserve stating that. And then again, you don't have to be even whether you're Snyder pilled or not Snyder pilled, regardless. Again, because Jeff Snyder believes that the Federal Reserve actually doesn't have actual control over rates, at least in the where it matters, right? Where he argues is that it's still psychology. And then with that psychology, you can actually still affect certain things. So regardless, you had the Federal Reserve stating that they were going to do something. So even if it does actually do that thing or doesn't, either way, both sides still agree that at least the thought of it will have set effects. And then that was a liquidity crunch that we're kind of still in. We're not actually out of it yet. And now we had, of course, today, what's her name? This Federal Reserve woman, I keep forgetting her name, but she stated that she thinks that inflation is a real problem, and the problem is that she's normally a bull. So now, she's now hawkish, right? And so that's concerning the market. But you know, whether or not, how does that affect you in investing? It shouldn't. It shouldn't really. You shouldn't really care. If you're, dollar cost averaging into index funds, keep doing that. If you're looking for assets at good valuations that you're comfortable with owning at those prices, keep doing that. It shouldn't really drive like, oh, I should, liquidate everything. I shouldn't do anything. But going back to your question, because, I'm being a politician here, not answering your question. What my thoughts are, and I'm trying to not cop out, okay, is that commodities, I think, are the problem with commodities is if they stay this high, they can harm demand, right? And if they harm demand, that in and of itself is the cure for that higher price. So often a common saying is the cure for high prices is high prices, right? So I am personally kind of taking my profits in all my commodity. We don't have to call them trades per se. I've owned some of them for over a year, some of them for less than a year. But my commodity investments, I am taking my profits and kind of just sitting in cash or just finding other places to put it. And I've been public about what it is I'm buying. But for example, ConocoPhillips, I'm still in the process of, selling that. I actually didn't sell any today. I don't even know what the price is today. I wasn't really paying attention to the public equities today. But let me actually tell you real quick what price it is so I don't misquote it. Okay, so you see we're back down to just under $100. So it's good that I've been selling it over $100. And I'm still going to be selling some here, because it's more or less within the selling price ranges that I've calculated where I'm comfortable taking my profits. BHP, I don't know what BHP is at, but I'm also I've designated it as a sell in my portfolio, and I've been taking some profits on this one too. Let me see the price because I don't want to misquote. Okay, so we're down a little bit today too, but tomorrow we might be up, and I'm still going to be trimming it out. But yeah, that's basically the strategy here. So I think commodities. Personally, I don't know if they're going to continue to rise higher. I just don't feel comfortable with making that prediction, especially if I believe that, should commodities stay this high, it could harm demand. And then, then you have a deleveraging of commodities, right? So, oh, and as far as the housing, because there you go, I was a politician, didn't answer on that. And I know that you basically gave me a really long question. It's short, but like there's a lot of content. So housing would be directly impacted by the rates of borrowing, and then that's going to not allow certain people to qualify that otherwise would qualify. And personally, myself, very excited for that. Maybe some people are looking to sell in a year from now, aren't going to be so excited about that. Hopefully they don't have to sell. Right. But don't take that 1 year statement as like me predicting that in 1 year. I'm not. It might not be. Yes, Spaceland, you like my new home. This is totally not a projected green screen. And that is totally, wait, which side? This side. Yeah, that piano is totally real. No, we were just playing with backgrounds here. So Foot Locker pays 40% dividends plus buybacks. Why buy Starbucks when similar businesses are cheaper? I'm not buying Starbucks, but maybe that's a rhetorical question. That's a question for everyone. All right. Hello from Germany. It's 4 a.m. here. Do you mine crypto? No, I do not. I don't mine crypto. I actually don't own any crypto assets. The only the only one. Oh, and my wife's apparently correcting my pronunciation. Pret à manger. Pret à manger. But no, but I was pronouncing it for the people. Not for me. That's for them to spell it. Anyways, she would be like, why didn't you mention that? Did you mine crypto? No, I do not. I don't own any direct crypto assets. I will be doing videos regarding the blockchain technologies, each system, kind of explaining it, because I actually noticed that there aren't many videos kind of going as in depth as probably people should. It's not going to be a statement of any particular blockchain being superior to another or anything like that, just simply the unique characteristics of each one, how they work, and why some might say that there's value in it. Why I won't really get into the counter arguments, because the counter arguments are usually the same. And not that I think they're invalid, but just because the video will focus on that. I'm going to be very curious to see how many people on YouTube believe that I make that video and believe that I am bullish on that blockchain without me ever saying that I am. I've had videos that I make about stocks and people think I'm very bullish on that stock, but I'm not actually trying to be. So I'm very curious when I do make that. Oh yeah, Duncan is a major competitor. I'm just not really mentioning because they weren't public, or at least I don't think they're public. I think they're private now. But yes, they are as well. Okay, so you should change your background to a strip club. Okay, so I'll get to that in the next live stream. There'll be a point where I end up doing that. I only just found out that StreamYard does support green screens. They actually hide it in the settings. So okay, so forget Starbucks. The airlines look more attractive in the short term. I mean, yeah, okay, you could make the argument for a trade here for the airlines. Only problem with that trade is you would have to. It's also that one's about the timing. So I'm assuming you're looking probably like at Southwest Airlines and the like. So let me look at Southwest right here. So Southwest is at 45, and the reason why I mentioned Southwest first is that they are the safest in terms of a balance sheet perspective of the Americans, of the large American airliners. We also have, for example, JetBlue, which, by the way, I'll segue into that. JetBlue just got an offer from. Oh, sorry, no, not JetBlue. Spirit got an offer from JetBlue. Okay, so they gave an all cash, which is actually very attractive, all cash deal for Spirit Airlines. And that complicates things because of Frontier. Frontier, I saw before the show started, some people were commenting about that Frontier made an offer beforehand. And that's going to be interesting to see what the company decides to do. I think that it is higher than whatchamacallit, than Frontier. So JetBlue's is $33. I just wanted to make sure. So it's $33 all cash deal. I don't know. What would you guys think? Would you take that deal if you hypothetically owned the entirety of the company and JetBlue just comes to you and says, we'll give you $33 per share or $3.6 billion? Would you take it, or would you still go with Frontier? Or let's see if Frontier comes back and says, well, we'll increase that as well. So yeah, that's going to be interesting. But yeah, there's Southwest. American Airlines, I know, is the most destroyed. I did a video a while back on the airline stocks, and that was when everyone was thinking they were a really good trade at the time. And at the time, my commentary was I was a bit more cautious. I thought that the airlines, you still need to wait. A little bit more patience was needed, and there still was some time for them to recover. And business-wise, not stock-wise. I hope you guys know what I mean by that. And so then therefore the stock price wouldn't really recover because the business hasn't really recovered. So if you look at American Airlines, we have a short interest rate of about 16.68%. The reason why this one has probably the most to gain is that it is perhaps the most distressed on the balance sheet, which is really is a shame, because all those people that bought the lifetime airline tickets. I'd love to see what happens if American Airlines actually goes under. But yeah, we've got here just a quick glance, 12 billion in cash and 35 billion in long-term debt. You take a look at something like United Airlines. Actually, United Airlines, after this, they're not too much better, but they still are better. So remember, 12 to 35, 18 to 30. That's UAL, so United Airlines. Then you also have, let me give you guys an idea. Southwest, I think, is cash positive, or at least they used to be. Maybe they're not anymore. But yeah, let me see real quick. give you guys that number now. So yeah, Southwest Airlines is still cash positive. They're 15.5 in cash and about 9.9 in debt. Delta Airlines is 11 to 23. So kind of the theme here is, of all of these, you have American Airlines, which is the most destroyed. And just like how we talked about Occidental Petroleum in that commodities investments, I actually would have been better off just holding Occidental Petroleum. But the reason why, and I still think it was a good idea because you never know, that I de-risked the portfolio and sold my Oxy for the gains at the time and rolled that over into Conoco, was because the balance sheets of the two businesses were kind of thrown off there. Or not Conoco, was it? I rolled it off into something else, but I took the profits and I rolled it off into something else. The point is why I wanted more exposure to Conoco instead of Oxy there is balance sheet risk. And same thing with here. So you have Southwest Airlines, less balance sheet risk. American Airlines, greater balance sheet risk. American Airlines has more to gain should things get better. Southwest does have to gain, but just not as much. So depending on how you want to play it, you want to go crazy risk or not that much. Not saying that Southwest is like not that much risk, but relative in comparison. Okay, so Graham Stephan's coffee company is a serious competitor. You know what? Maybe do you guys, should I buy some of his coffee just to test it out? I hope he sells the beans because I have the coffee machine, so I have to put the beans up top. If he gives it to me the other way, I mean, I can do it the other way, but yeah. Did you realize talking to Roman general? That's fine. All right, right here. Buybacks also increase yield on cost for dividends, right? So if Foot Locker does like a 25% buyback, that would increase their dividend yield. 25% already pretty much a high five. No. So it lowers the payout ratio because there's less share, like hypothetically, assuming that the share count is going down and the earnings remains the same, the buyback is reducing the share count, in which case you own more and more of the profit. And the dividend, hypothetically speaking, let's say everyone gets $5 a share, all right? Or not $5 per every share that they own, they get a dividend. And let's say there's 10 shares. So if I do that, I'm paying out $50. Okay, so let's say I buy back half of those shares. So now there's only 5 shares, and I'm still paying $5. And I forgot to say what we're making, but we're making $100. So before, the payout ratio was 50% because I was paying out $50 in dividends, $5 per 10 shares. Now we have 5 shares. Okay, so with those 5 shares now, I'm still paying $5. Now 5 times 5, 25. So now I cut the payout in half, but you are still receiving the same amount in dividends as you did before. You just now own more of the profits, and now the payout ratio is lower. Now, if I said I still want to maintain a 50% payout ratio, I can increase your dividend to $10. And so instead of receiving $5 per share, you're going to receive $10 per share. And in that case, you have a higher yield on cost. But that has to occur. So like a 2-step process. The buyback by itself does not increase your yield on cost. It has to be, a buyback, and then they have to raise the dividend back to the previous payout ratio. But good question. All right. So I know. Okay. I will get Mustafar. I think on the videos, at least Zoom does. I know that you can actually put rolling tape. So actually, I can put like the battle back there. I'm just talking about a video. I'll probably do it for like Disney, and I'll have like Anakin and Obi-Wan just like fighting in the background. They'll totally copyright strike me, but I don't care. So it's just worth it. Just having Anakin and Obi-Wan just fighting, totally not distracting from the conversation, and we just talk about Disney stock. And I don't know. You'll get to that scene where Anakin's just like broing up with Obi-Wan, just choking him. I don't know. We'll be evaluating the stock on the model and stuff. All right. So I am looking at banks always. I do like banks, but I don't own them anymore. I already sold off all my banks. I've had this question a lot because Citi is in the portfolio and it's the only bank in the portfolio. It's not because I only like Citi. I like Bank of America the most, and then I like JP Morgan. I also like Morgan Stanley. but Citigroup is the one that stayed, and it stayed because of the speculation that the new CEO might be able to turn things around. Like, for example, Citigroup of the big guys is the ugliest, so they have the most to gain should things improve. But yeah, okay. So if it's Geonosis, same thing. Battle of Geonosis in the background, one of those. I would like to know Mike Stath's opinion about Starblix. I mean, you can ask him. You just go and ask him in his live streams, I guess. I don't know why you're telling me that. Any thoughts on SBR or TPX? Well, let me make sure I remember who those stocks are, what those companies are. So it's SNBR. Let me make sure that is no Sleep Number. Okay, you're asking me this probably because no. Let me see who TPX is because I know that is in someone else's portfolio. Temper Sealy International. Okay, so both of them look like cheap stocks. Just quickly looking at the PE, you know how I feel about that. But all right, so this is together subsidiary manufacturers and producers states. So they're both mattress companies. All right, so mattress companies tell you right now, right off the bat, Sleep Number and this other one, they're gonna look cheap. They're gonna trade cheap because they're ugly companies. Sleep Number. Why the heck did Sleep Number have that run? You know what? Let me see if I can share the screen here because I have this dual screen thing. So yes, I can. Yeah, what the heck happened here? Okay. Yeah, what is this? Who is the mad lad buying Sleep Number Corporation at $140? All right. Who is the mad lad doing that? All right. And then let's take a look at Temper Sealy International. So Temper Sealy International, similar thing. Quickly just looking at this is what I was talking about, just low PE. And I think the same thing with why are you not remembering what I looked up? There we go. Yeah. So you see, they both have about the same PE. I guess that's why short interest is pretty high. I mean, I don't know how accurate this one is. Yeah, I'll take a look at them, but these are ugly companies. These mattress companies are typically ugly. Another company that has exposure to the mattress industry, if you really like the mattress industry, is Leggett and Platt. This is them. I don't own them, but I respect them as a business. I said they have exposure. They're not a mattress company per se. We're seeing a trend here. They're kind of all kind of having this trend down here. But this is more of like a blue chip per se. They make the parts themselves. All right, so let me stop the sharing. We'll come back here. All right, so no. That, remember, ask me on Fridays. Fridays live stream, I'll have that. I'm going to be doing the live stream on Friday with Eric from Investing Sucks. I have to confirm with him. Again, we weren't able to do it last week because his work was pretty busy. So I'll look at it by then and tell you about it. Those are the two Chinese companies that rug pulled, right? All right. So do you follow trucker protests in Canada? Thoughts on diversifying your assets even if you live in a free country? I'm hinting at freezing of accounts. Well, yeah, actually, I actually, well, my family in general, like my wife, me, we have different bank accounts, and yeah, so I think we already kind of think about that, but it's more like convenience, relationships elsewhere. It's something that you can kind of build to. I'm not, one saying that you need to go to someplace like what's that guy called, like Nomad Capitalist, and do all that schnaz. No. Don't waste your money. But I feel like it's something that if you want to do, there's why not? If you really think that's a problem. See, that's the thing. The nuance of that is like what makes you feel comfortable, What makes me feel comfortable doesn't mean that it will make you feel comfortable, and vice versa. If you feel like that you need to do that, go have at it. That you are like a cog in a machine, being the free market, and then as everyone kind of interacts with one another, we're all the same cogs, and we all kind of enact our will, and then change happens. So if everyone starts to believe that, change will happen in that aspect. All right, so yeah, I personally ascribe to this. I tend to avoid them entirely because I just don't like them too much. Why is the market red today? Federal Reserve came out, and again, there's no doubting it. The market is sentiment driven. I've stated this, for example, with the Chinese stocks. I was always talking about how the Chinese stocks we were just waiting for the coddling moment to occur. And like, I don't like to just throw money away. So there was a dual motive for me owning the VIEs. And, again, we had more direct sentiment driven rallies. And those have actually, I think I'm now up on the BABA position. So I was down for a second, but I made a rule. I'm not going to add anymore. And again, that's on the portfolio. You can just see it there. All right. So some airlines have a lot of share dilution. Yes, because in order to survive, they did exactly that. They diluted their share count, and that's a big problem. All right. So I would consider Alaska Airlines. It's the right price because of logistics for fishing, lumber, oil companies in Alaska. But I'm not big on airlines in general. Absolutely. So you see, like, we can all identify that there's an airline that you would put money into, but will you? And there's also like Hawaiian Airlines. There's a lot of companies, publicly traded companies in Hawaii. They're just like Hawaiian based and they're just strictly Hawaiian. Like, I think it's Bank of Hawaii, Hawaiian Electric, stuff like that. Which Hawaii, it's kind of interesting, but not saying that those are good companies or good buys. All right, so Micron or Intel is a long-term semi play. Of those two, dang, I'd have to go with, like, depending on the price, though. You see, that's what okay, but as a business, what I would be more comfortable with holding is Intel. While Micron might actually outperform Intel because maybe the price is better. Intel, its business avenues are less commoditized. We are seeing a lot of interesting things. Like, well, I don't know. AMD is really surprising me. I've been actually checking out the performance of the 6900 XT. I don't know if any of you guys know graphics cards or anything like that, but it's actually keeping up to pace with the 3090, the NVIDIA graphics card, and at a fraction of the price, which is interesting. And that's after all the drivers. I think at launch it was terrible in comparison, but right now I think they're very comparable. If you can find one at the right price, then it's pretty interesting. So I think that AMD is doing really interesting things. Like, of all of them, I think AMD has the best leadership, the best allocation of capital, and all that. It's just the price, right? So I'm not the only one who thinks that. All right. Airlines is a terrible business. By the way, I'm skipping over questions, or not questions, comments that you at someone else, because I just assume you guys are having a conversation. That's my like new policy, because I was accidentally doing that before, and I was like, oh, I need to stop. So it's not personal if I skip over you. If you have added someone else, I'm just moving on to the next one. So airlines is a terrible business. High depreciation, increase. Yep, all these things agree with that. Generally, you want to be long government on everything, in my opinion. Long government. I don't know what that means, but maybe this one. Government almost always wins, or failing that they can change the rules. Do not bet against the government and always obey them. Don't be like the truckers. Dang, Elemento. That's that's wow. For everyone bashing the airlines, I said short term, not long term. Stop trying to sound smart by trashing their financials. All that matter in the short term for the airlines is news cycles. I mean, sure, short term trade. Um, I mean, definitely, like, they are cheaper than what they will be when things kind of get back, but fundamentally, they probably don't deserve it. Maybe like Southwest. Southwest probably can deserve it, but there's still been some permanent shareholder destruction in terms of value in both the airlines and the cruise liners. Cruise liners, of course, some of them more than others, but it's the kind of same thing. All right, okay, other stuff. Well, even that. Oh, sorry. That is directed to someone else. So you see, that's what I'm trying to avoid. Okay. Do you use Bruce Greenwald's method for estimating the maintenance capex? Not entirely, not always. It depends. A little bit nuanced there. Confused on what my expected return would be: ROIC or IRR or ROE. Like, ROIC is 30%, IRR is 10%, ROE is 9%. What my estimated return as a shareholder? No. Okay, so these are all different things. So your IRR, how are you calculating that? Because your IRR needs to be based off of the actions of like the cash flows returned to you. That's what IRR is meant to calculate, and then what you're going to sell it for. So it implies a sale. ROE is an internal metric of an operational of a business, right? So it's to measure the business's operations, not your like sell price or your performance. ROIC is again similar to ROE, but it's an internal metric. So of all those three, you'd be using IRR. ROIC, you want to use it as a metric to measure management's ability to actually grow the business and reinvest that capital and grow and grow and grow and grow. So I use ROIC, for example, as a metric, and ROE, depending on the business, to determine whether or not I want capital returned to me or I want them to keep it. If ROIC is very low, I'll say, it's time. You've become a cash cow. It's time to hand it over. If ROIC is very high, I would prefer the business to keep the cash, not create taxable events, keep doing what they're doing, pay me the tax later down the road once that ROIC comes down, or ROE. Tempur-Pedic Sealy. TPX, it is? It is, yeah. It is. I wasn't even paying attention to the name. So it's all that memory foam stuff. What about purple? You guys didn't ask me about purple. We got purple, I think purple is really heavily shorted. Let me make sure. What's it called? I think Purple Innovation. Yeah, PRPL. Yeah. Well, it's not as short. It's 12.35%. It's down 5% today, almost 6% today. Yeah, it's a smaller company, 490 million. Let me know if any of you have a purple mattress. I don't know anyone with a purple mattress, which means it's not a buy. If you don't know anyone with a purple mattress, that means it's not a buy. All right, thoughts on Perry. Let me actually take a quick look at Perry. Perry and Network. All right, so what are we looking at here? Okay, so publishers, brands, agencies. Take a look at this. So positioned to capitalize on the shifting budget between the three main pillars of digital advertising. Oh, say digital advertising company. All right, so digital advertising company, don't understand those, but I can take a look at them later. But yeah, don't understand those. So this is digital advertising analytics and stuff like that. They also have a supply chain management platform. Okay. Well, they're not egregiously overpriced for everyone who's wondering. It's about a 22.99 PE, about $1 billion market cap. But that's just a snapshot look. We're not really looking at the cash flows or anything like that. Yeah, revenue is expected to grow, but will it grow? So, okay, so I see some. Let me see. Take a quick look at the. Okay, so they have more cash than debt. Good balance sheet. Actually, no debt here. 321 million in cash. Well capitalized. Okay, producing decent cash flows. Growth rates are implying. What are they expecting? I'm just going off of them because I don't know the business. Okay, they grew 45% last year, 29% this year. Looks like it's growing decently. If they can maintain these growth rates, it might be cheap. It actually might be cheap if they maintain these. If they don't, that's a different story. That's the nuance there. Will they maintain those growth rates? Because those are phenomenal. All right, I have INTC sticker price based on the free cash flow at 57.47, MU okay 57.17. Based on this, INTC is trading at a margin of safety relative to the future growth prospects. Yeah, probably. I just don't like. I mean, I don't know if I came out with those prices, but yeah, I think my prices were in the 40s. I need to talk about Stitch Fix. I know one of you mentioned to me that I need to talk about Stitch Fix. I had made a video saying that my price value or my valuation statement for Stitch Fix was $11, and one of you commented on that video more recently, stating that if I could get a update video on that. So let me actually find. I'm trying to tell you the date I published that video. All right, so it was actually 4 months ago now at this point. 4 months ago. So let me see right here. Yeah, it only got, I mean, that was when the channel was much smaller. It's one of the earlier videos, November 17, 2021. So I published that video November 17, 2021. And then let's actually take a look at Stitch Fix. So I'll actually pull it up here. for everyone to see. Oh, it's actually just under $11 now. So pull you guys up over here on this side. All right, yeah, Stitch Fix. Let's see. It kind of went in November. Where was November? Yeah, so it's right here, November 17, 2021. If you guys are curious, is that a no, it's a black background. Some of these titles were funny back then. Yeah, but Stitch Fix, November 21, 2021. It was, where were you? Yeah. So I was out. I'm just trying to get my bearings on the price at the time. So yeah, saying it was the value was probably around $11 when it was around $30 a share. Let's be accurate, 28.5. At the time, I think there's a lot of people that really like this company because it just had went through this. So you got to understand. So people sometimes look at this and go, it went up, now it is down. It will go back to that price. So why am I stating this? Well, I sometimes have opinions about certain prices being a little bit crazy. Not that Intel was crazy, but I only disagreed with Intel's allocation of capital, and that's about it. I didn't really have any other problem with Intel. I just didn't agree with how they were getting the capital. I think I've said that over and over and over again, but just in case anyone's new. So SBR probably buybacks. Yeah, they probably do buybacks. They look cheap. Okay, did you buy more Mag? Yeah, I did. I just nibbled into Magna. What is your price range? Would you buy Netflix? I have to be very careful how I say that, but how I am purchasing Netflix is I'm just continuing to purchase, not as heavy. I kind of purchased a bigger lump sum than I normally do, and then so far, it's doing okay. But I don't really care about how much it's performed recently. I'm not going to be talking about stocks that I'm just barely up on, or stocks that I'm even up on at all. I don't like to talk about those kinds of stocks. They won't even provide value unless there's a specific case study, which is why I ever mentioned the oil companies, was because it's a case study. Like I don't talk about AbbVie. I'm not going to talk to you guys about AbbVie, even though I have been requested. So I do want to say to that subscriber out there, I will make a video on AbbVie. Why did I buy AbbVie at the time, as a kind of like a case study for future prospects? But yeah, Netflix is looking good. Got a text from the wife, so everything must stop. Hi. Okay. Yes. Okay. I think Netflix is worth about $50 per share. Okay. I mean, depending on how you're evaluating it, I'd say that you could come to that. Okay, so in a time where information is available online, easily accessible, do you think there are still inefficiently priced stocks out there? Almost all stocks seems fairly priced given their risks. Not for imagination. So the thing is, where a lot of our edge comes from is understanding a business and where it will go from here. So that takes another level of understanding of a business. You're right that arbitrage has been quite drastically eliminated from everywhere in the market. But that's it. Arbitrage has been. And so it's basically meant that our markets have become more efficient in that prospect. But at the same time, there has been some changes that have enacted greater volatility. So we know that, for example, a lot of money is, or it's a lot easier now to buy in and out. So that means that the levels in which someone can exit a position and the speed and the velocity of exiting a position have also gone up. So sometimes you'll see these crazy moves down and then we can capitalize on it. So for example, Foot Locker, we saw kind of, perhaps for now, I don't know if it is a dead cat bounce, but I'll go ahead and pull that up. Foot Locker is a decent example that I can pull up. So, it actually is down from when we sold it. I mentioned it, I think, in a video when I sold it. But I for sure, I made a video on Foot Locker, and I guess this is a good case study here. So right here on this big drop, and what I'm going to end up saying is that it's very nuanced, the efficient market hypothesis. It's not, and by the way, proponents of efficient market hypothesis do say that it does not mean that you can't, make money from a stock price going up and down. It simply states that the stock prices at the present moment more or less reflect all the known information out there. I think that is true to an extent, but I think it's mostly true. But taking a look, for example, at Foot Locker, when we had the collapse here, right? Zooming in a little bit. This is a crappy chart really to use. If we really want to get the most out of it, we got to go on FL stock here. Pull this up. Google has a much better one than that website. So yeah, taking a look right here, we had this big drop in a single day. And then that's when I made the video and I purchased intraday. It doesn't show you the exact day. If you actually watch the video, you can see the price on that day. This shows like the ending day. So it's still not the best because we can't actually find the prices on that day. But just for convenience, I'm using this. So it got as low as I think 27, 26 something. And then it kind of closed off at 29. So not that saying efficient market hypothesis doesn't say that this can happen, for example, because right off after that, you had an 11.59. And then again, that's from that high point of 29 during that day. Again, it got really low. I think we got in at like 27 something. I don't delete the positions. I keep them even when I sell them so that, people can see like past positions. So the price is still on the portfolio. I don't know it off the top of my head, but I think it was like 27 something. But again, we didn't sell it at the exact top. We sold it in the 30s. And so why did this happen? Well, you can still make money from overselling, right? Overselling, fear, too much fear in any given stock, right? And so that's kind of answering your question a little bit there. But what I'm getting at is you haven't been replaced as far as your imagination goes, and you have the added benefit that in some instances, volatility is actually increasing because there are lots of money behind these algorithmic trading. And these algorithmic tradings may execute a trade based off of some slight change. We had, for example, like the flash crash, we had very quick crashes in, remember, December 2018, March 2021. So in theory, the theory goes, and this is kind of getting into the academics of it, not really like the practice, but this is in theory. And so far in theory, it has kind of panned out. I think this is really interesting. I would like to know your thoughts. So as the market itself has become more index sized, ETF sized, so to speak, where the money is kind of becoming more what we call dumb money. And not that people are stupid for investing it. That's not what it means. It means that the money isn't like behind someone who is thinking, right? It's usually a machine, a pre-programmed machine, or a set of rules. Better to call it that, actually. It's a set of rules. And because of that, you imply that the set of rules are perfect going forward to here to the end of time, which is not really ever the case. I don't think that none of us can actually say that that's a logical conclusion to make. So when that occurs, as we know that most of the money is controlled by dumb money, or a huge portion of it is, then we actually stand to benefit in the sense that we could see greater sells in the down to the downside and greater or faster rises to the upside. I think, 2018 December showed us that, March 2020 showed us that, and we'll continue to see that here on out. And that will be better for individual investors. So like the tables are kind of turning in that aspect, but that's the academic side of it. It's not really, we'll see how it really turns out. Okay, so I will address Musk and Twitter. Let me get to this one. Please tell me that's a green screen behind you, or I'll be forced to hate you. Yeah, it's a green screen. No, we were talking about this. So check this out. So I will change this up around, but right now, you see, I'm in an office now. What actually happened is I purchased the Elon Musk teleporter that other people were mentioning before the live stream started. So I now own the very own Tesla teleporter. So at the moment's notice, right here, I'm in an urban environment. Now I'm back to, clearly this is my house with my piano back there that I play all the time, and this wooden furniture that my wife would totally like. Nothing against this outlook of this house. Just my wife is more like, she likes the modern style. So I addressed that earlier, but she wouldn't want that. And, like I said, you give up that freedom when you get married. All right. So do we want to address Musk and Twitter? Seems like high risk, high reward having him involved in that business. Brilliant guy, but pretty undisciplined at times. So I think that if he were able to make the necessary changes, then Twitter would be a viable platform. I don't use Twitter. I don't have a Twitter, or I might have a Twitter from my olden days, and I never go on it. I don't even think I even used it. I think like other people used it. Yeah, because I never found the appeal of Twitter. But with that platform, the thing is, like Twitter, we're going to get into like some philosophical discussions here if we get into that. But I think like Elon Musk's in principle, what he's trying to do, or what he states that he's trying to do, because maybe he's not trying to do that, is to the benefit of Twitter if Twitter actually accepts these changes. But the problem is I don't think they will. And I think now it's kind of more apparent that Jack Dorsey, because we all saw his interview, right? Jack Dorsey, he probably was actually, he had his hands tied in terms of what changes he could or could not do in the business. And here I am realizing I have a lot of questions to get to. Sex flicks, I love it. All right, so what do I do for a living? So I've addressed it before. I'm actually having a bit of a career change in the moment. But currently I do work for a fund that goes within a corporation or a company. I don't want to say corporation because people think it's a big thing, but it's not that big. And then I look for different opportunities to invest the excess working capital that the company doesn't need. I'm not the one making the full blown decisions, but I'm part of a team. Okay. You know, and again, my current career is going through a transition moment that will take in effect this July. So I can't really talk about it too much, but I'm also doing some things on the side actually. This is the passion project, and I actually got worked on for something on the side, which will be pretty interesting. But I don't know if I can really mention it now. I might be able to mention it now, but all right. So thoughts on Tesla managing to grow so much while everyone else is in the same environment that has shrunk drastically. Okay, so Tesla growing. I mean, they're growing off of a smaller base, so it makes entirely sense. All right. And they are the hot product. Let's be frank. They're the hot product. They're the one that everyone wants. I love Tesla. I love the Tesla car that I drive is very nice. Will it be this? Will I get another Tesla? Will I get a Tesla? I don't know. I'm looking at the new electric Porsche lineup that's coming out in 2 years. But yeah, I can't say I can complain too much about it. So. Literally when it came to it, it was like electric car. Who do I think of first? Tesla. Purple is a laundering front. I love those theories. No, those theories are like amazing. No, because there's always the theory that the mattress companies are all laundering. That's a joke for the lawyers out there. I'm completely joking. I don't actually mean that. Perry is trash. Yeah, maybe I haven't taken a look at them really. Invest for the future. He's a pimp. Guess who his pitches are. Who are we talking about? Hey, Fabio. Now that illegals are swarming the United States, Geo might be a good midterm investment. If the Republicans are able to recapture Congress and the whole. Well, I actually liked CXW more than Geo. They're both going through the transition of C corps. So they were REITs before. Now they're transitioning over to C corps. And then I think Michael Burry had both of them at some point. Not to say that that's validating the investment thesis of either, but you actually want to buy them when there's the fear of a Democrat in the office, and you're just playing on the people's political emotions, and I love doing that when and in both sides, by the way. So people allow their preconceived political philosophies to kind of cloud their judgments in a lot of investing ideas, and you get that in sort of like crowd formation. So based on some political figure winning, an asset can be heavily distressed, oil, and not knowing that political figure is actually the favorable one for that asset class. So again, in the oil video, I explained this that. Which was actually funny because I'll tell you guys this. I did have a subscriber that was, I could tell that person was, they were very early on, very vocal. And I could already tell that they were, leaning more to one side than the other. And that's all fine. What you do in your own personal political beliefs is whatever. But I made videos basically stating that, oil was a good trade as long as this political party was in power and for these various reasons. And this individual didn't really like that. And then that's what I'm trying to say is the lesson from that is don't allow, none of us should, well, we should try to, because it's very difficult because we're very emotional creatures, but we should try not to allow our political opinions to kind of guide our investing philosophies. In fact, we should probably take advantage of how it lets others guide their investing philosophies. And then we can try to catch ourselves when we're doing it. But yeah, I'd say that you want to purchase them when these assets are distressed during a Democratic presidency. Yeah, the private prisons were a little bit distressed. I think they've recovered a lot though. And of course, you have the aspect that a lot of people are going to say they don't want to invest in private prisons because of moral reasons. I've made a video about that. That's all well and good. We can all have our own like lines in the sand. Yeah, you see, they're already up almost 100%, but of course, they have more room to run if you believe that the NAV is actually much higher and that they're trading below that NAV. Okay, so can we discuss how Elon gets away with securities violations over and over because of the teeny tiny fine that's imposed? So you're saying he gets away because of the scale of it, and so he is at a much larger scale, and so that the fines don't really affect him. Is that what you're saying there? Um, yeah. Because okay, I'm trying to say put this in a maybe a different perspective, but um, yeah, it's difficult to say because yeah, there's some element there that I can see the argument for saying that Elon Musk seems to be getting away with a lot because maybe his positioning, maybe of how important he is for the U.S. economy and et cetera. But um, yeah, I get your frustration. I know what you mean. All right, so everyone just wants your constant update opinion on all. Well, because let's be frank. Let's be frank. Uh, Jeremy from Financial Education, I think he's top dog or one of the top dogs. So he carries, of course, the most influence on YouTube. So it makes sense that the grand majority, if not all of you here, have watched his channel or do watch his channel. So YouTube finance is, from what I see, not very large. It's more or less the not I'd say if I had to put my guess on it, there's probably a total of 10 million viewers. And 10 million is nothing, but there's probably like 10 million viewers. And if he has, let's say, I think it's close to a million. Let's round him up to a million. I think he's at 700 something. Round him up to a million, he has about 10% of the viewers. And you have me, Kevin, who's at like 2 million, right? So they control massive swaths of that pie. So, if they say something, people watch it, it kind of gets in their heads, then they're going to ask, more likely to ask questions. All right, so those crazy folks at Palantir really launched a satellite to do edge AI in space. Did they really? I mean, yeah, edge AI is interesting. All right, you mentioned Abby. I'd take a look at BMY. I already had BMY actually. I sold BMY to buy other things. I'm happy that I did, but BMY is a solid business. No, BMY is a solid business. So I actually already know. I didn't sell BMY because they were not a solid business. I sold BMY because I wanted to put that cash elsewhere. But yes. Are you using? Yes, I am. Yes, this is not an office. No, this is my home office. This is my home. No. Wait. Let's scratch that. No. This is not a green screen. This is my home office. And that wall over there, that room right there. Wait, that one is not an office at all. That's my bathroom. I have it as clear glass, so everyone who walks by is intimidated by me as they look me in the eyes. And also, yes, my home office is actually a real office that other people work at. And actually, I rent these offices out. This one right here, that's Goldman Sachs, guys. So as the executives are walking down this hallway, I'm using the bathroom. We can make eye contact and make them feel very uncomfortable. But then they just know that who owns the office, right? They just know because I'm there sitting on the throne, right? All right. So, but yes, I do that because it brightens up and I can just play around with it. I can add different things and we'll have fun with it. I didn't even get it. Yeah, I know you're joking. Yeah, we could have bought in London, but the thing is, I don't know if they're gonna, just take it away from me in London. Those guys. My calculation, I use NTC 5-year tax provision average, and it's more appropriate to use much more conservative tax provision value. So the tax provisions year over year has been unpredictable. Okay, so that's how you came up with yours. All right. Well, we came up with different prices, but that's the beauty of the market. Okay, so ha ha ha. Did you get a prenup? No prenup. Do you recommend getting a prenuptial agreement? No. I mean, hopefully, you're not you're careful with who you marry, right? And how about this? How about you guys marry someone? Here's a thought. You marry someone who has equivalent capabilities as yourself, and you don't have to worry about that, because then it's kind of like you guys are like, but you shouldn't be thinking about that in the first place. I'm just being funny there, but why not just try to get someone that's you don't they don't need a prenup because they're not living off of you per se. They don't have to live off of you, right? Yeah, what I'm saying is get one of those super women, that can be a mom and work and all that stuff. Maybe they make more money than you. Actually, for a time, there was a split moment in time where my wife was making more than me salary wise, and we joked around and said like, "Oh, you're the breadwinner," and then my friends would be like, "Oh, you must really love him because you have to support him now." So we're just making jokes here. We're just making jokes here, you feminists. I'm kidding. My wife is a powerful woman. Anyways, jokes right now. There's no alcohol involved in this live stream, lads. There's no alcohol involved here. This is just late night Fabio personality. Okay, so yes, definitely ETFs are booming right now. Many buying ETFs every month blindly. This seems to be pumping stocks higher. Wonder how this is going to end. Well, actually, that's Michael Burry's thoughts. Here's the thing: if you're the true index investor, you won't care about this per se, because you'll just buy it lower. Most people probably are going to treat index funds just as they would regular stocks during a crash, and that's the unfortunate side, because index funds alone aren't a guarantee to your success, because the whole Bogle strategy, you have to follow the Bogle strategy, which a lot of people aren't going to do. So if they're invested in a more volatile ETF, they're still as likely to sell. It's still a highly liquid instrument. What really a lot of people should do is, and I'm going to be very careful I say, but I have no skin in this game. I don't manage any individual's money, so I can say what I want, right? I don't care. I don't think, well, whatever. But I'd say that people ideally should have, in an ideal world, there was a way for you to lock up your money from yourself, where the other end of the party was actually performing in your fiduciary responsibility. But do you see all the complications with that? Is the reasoning why that's difficult is most of it's very difficult to find someone with true fiduciary responsibility to you in the actual sense that they truly want to help you, which makes it difficult. All right. So yeah, okay. So that's the answer. Yeah, your other thing. No. By the way, your retirement accounts are, I think they are protected. Your retirement accounts. But yeah, my other comments about it still stand. All right, so I got to get down to these. I'm curious if Capital Mindset got one, since he made a huge mistake of getting married. Well, like I said before, no, there was a time where like I'll say this to kind of give you a glimpse, because I don't show you guys her portfolio, but one, I'll just say this: she's actually a pretty good investor. And as far as her job goes in her industry, I won't say specifically what she works with, like what company, but she works with tech, specifically in the automation side of tech. So she makes she's in a good place. maybe it's good that she didn't get a prenup with me. Did you ever think about that? Did you ever think about that was the strategy the whole time? You guys, come on. All right. So do you recommend all these questions? All right. So since there's, look, if you think that you need one because of the person, get one. Okay. If you're, for example, maybe the provider, we're assuming that you found someone that you're still, because the only reason why you would need such a thing is, it's kind of an uneven trade. Okay. So, yeah. I mean, like, okay, if you want one, get one. How about that? Cop out answer. If you want one, definitely get one. I also think INTC is getting $2.1 billion in tax incentive for the fact. Yes. So that also is a benefit. That also is a benefit. Look, I would like to own Intel, and I'm kind of just waiting for my price point, but definitely I want to own something like an Intel. But to be honest, I'd prefer something like AMD. I like that Intel, though, is not a fabless company, but the thing is they have to juggle it, right? They have to actually do well being a non-fabless company, right? There are the benefits and drawbacks. All right, so historical fines have about 100K. Okay, so this is going back from this. Yeah, yeah, so I understand, yeah, because the scale of Elon Musk. The scale of Elon Musk indicates that. Yeah. So I can totally see that, and that the fines are not adapted for the scale of the individual. Um I can see that agreement. And again, that's where a lot of the criticisms from Mr. Musk comes from. And a lot of the short sellers use the same arguments. I'm kind of more like the neutral. I have my opinions about Tesla. Uh, but like I completely understand both sides. Like for example, I even though I like the car, I have no complaints about the Tesla. Um, I can say that I would consider another car for my next car. But I don't despise Elon, but I don't love him either. It's kind of like I'm the milk toast fence sitter when it comes to Elon Musk. So no, I completely understand this point of argument, right? This line of argument. I'd say that there's credence in there. Thoughts on staying in and contributing to a mutual fund with near 2% fees versus selling and going low cost index, large sum of money versus selling. Thoughts on staying in. Ooh, that's personal financial advice. Because that's like, I think you're asking about yourself, maybe. But okay, in general, the idea is, in general, people want to get involved in assets that produce a good return for the lowest cost. So you have to judge that for yourself. Is it producing a good enough return to justify the cost? Will it do that consistently? Is the second question you have to ask. And think about the volatility and the effects on your psychology. Most people, the point of going into low cost index funds and just doing the Bogle strategy is a lot to do with psychology, right? You're supposed to ignore the inner workings of your brain that say sell, sell, sell at the wrong time, which is the worst thing you can do. And build your wealth over time, and then it allows you to go focus on other things like improving your income, right? Increasing that income. But yes, I have to be very careful. All right, given his wealth, it's yes. So yeah, continuing from that, I agree. Yeah, good night. No, you're big four counting. You need to go to bed. You need your rest. Your brain needs your rest. Good night, JP. All right, so what the fuck is the point of the prenup? Oh, this is probably a comment to someone else. Yeah. Yes. So this is actually a good point for that. So if your prenup doesn't give the woman enough, a judge will throw it out. There's no way to protect yourself if you get married. A prenup might help on the marriages, though. Okay, so there's ways to protect yourself more, but it involves like trusts and stuff. All right. I'm not going to talk about it here because that might constitute tax advice or financial advice, but just like talk to a professional and they can probably give you more information. How did I meet my wife? Okay, so we met. All right, funny story. We met in high school. We didn't date in high school. We didn't date until college. So yeah, but we knew of each other in high school. That's technically when we met. Okay. Fabio, do you mind sharing what your salary is? I'm about your age and curious what people my age are doing. I do not share numbers such as portfolio size or salary size. It's to kind of keep that private. And, you know, I don't want, well, I wouldn't want anyone to treat me any differently. And I'm not trying to sell you anything based off of argument from authority. So, I'm never going to say, look at me, I'm right because of X, because I have this much. I know that is a strategy and probably grow maybe faster, uh, but yes, I'd, nah, yeah, but I think like if we want to have a conversation like that stuff, I do take consideration of requests. I'm gonna figure out how I'm gonna do it, but I will take consideration of requests of like having some subscribers on. I've already got some emails about some subscribers who want to have conversations with me off camera. They don't want to actually be shown, and they have well, according to the email, they have some valuable information because they work in some industry or something like that that I would like to actually learn about. And then in that case, that might be an interesting conversation. And then I'll just share the information that I gather with you guys. But yes. All right. So there are three types of meme stocks: game stocks, AMC, and index ETFs. I guess in that sense, well, there are a lot of ETFs that are definitely meme category. No, don't worry, don't worry. I have like quite literally the thickest skin. We have some guys that come on here occasionally, and I think one of them was a little bit more on the if we want to say the right way, on the hostile side in the beginning when they first were commenting, and I think now they've become a little bit more docile. So I'm not saying that you were hostile per se, but I have the thickest skin. Don't worry, nothing really offends me. I'm asking because I make over 100K a year and my girlfriend stays at home. Well, I mean, okay. So that's something you have to be honest with yourself. I mean, my wife, she does, well, she works from home. A lot of the stuff she does, it can be done from home. And okay, so you're giving me more information. You're in America. I'm gonna try to say what I say without constituting financial advice. But no, do whatever you feel comfortable. If you're gonna marry this person, then sure. Be honest with yourself. Are they with you for monetary reasons? If they are, then yeah, maybe try to find yourself some protection. Given that maybe you have a good amount of savings piled up, you're not married right now. So right now you're fine. The consideration is if you get married. Does she want to get married? Is she pushing that perspective? I don't want this to turn into some like what's that alpha whatever podcast. But yeah, just from this perspective, I'd say think about that for yourself. It goes back to that old thing I always say, that additive. Be honest with yourself. The only one you'll hurt for not being honest is yourself. So if you're honest with yourself about the answers to those questions, and then you come to terms with whether or not it's a good idea or not good idea, I think you'll make the right decision. Oh, wait, you gave me more information. I trust my GF not to get one, but everyone on YouTube says to get a prenup. Look, yeah, like I say, if you end up feeling like you should get one, you should talk to maybe a legal professional and figure out more about that. Has anyone considered if Taiwan Semiconductor down is AMD is highly at risk? I haven't considered it. Thank you for bringing it up. I would think that Taiwan Semi has thought of that, and maybe AMD has thought of that, and they have many facilities. But yeah, yes, I haven't really considered that. Thank you for bringing that up. Don't you worry about AMD. Don't you worry about AMD. Don't build their chips and get them from Taiwan Semiconductors. Yes. Okay, investing for the future. Yeah, like what I was just saying up there, and why I do like Intel. I like that Intel is not fabless. That is a benefit. But like there's also a drawback. AMD used to not be, and then they spun it off back in the day, and they actually became global foundries. So yeah. I'm in Tampa. You're in Orlando. I used to work for Port Canaveral. Which port should you take a cruise out of? Which port should I? I don't know. Yeah, I would usually go down that way if I ever go on a cruise, or through Miami. Those are the ones I choose. I'm not going to fly to take a cruise. Maybe if it's like a special cruise that I'm going in Europe or whatever, maybe I'll fly to take that cruise. But yeah. Domino's Pizza, a recession play? Maybe. I don't know. Maybe people are going to, Domino's Pizza is so cheap, and it's kind of good. There's a pizza place by me that I absolutely like, and I take that every day, all day, every day. So when the buddies come over and we watch movies in the movie room, we always hit up this pizza place, and I'm just bringing it up because I'm thinking about their wings now. Oh, their wings are so good. Oh, I got to do that soon. But yeah, Domino's though, if that place is closed, because that place closes at like 11, Domino's is I think open around that time, and they'll close a little bit later. We'll hit up Domino's. Domino's definitely there. Yeah. So I know sometimes I'm a little bit diplomatic, and I know people want like more like stuff, but yeah, help raise awareness about it. There you go. Elon Musk needs to pay more every time he violates something that other of us 100K would be a lot more for. I can get behind that. Okay, so wanted to stay at home. I wanted to stay home. I eventually want children. Yeah, so you see that's the other thing you got to think about, because okay, then you evaluate being a mom is a job itself. Do you want to evaluate that as sort of like a job in and of itself that deserves some form of monetary compensation, i.e., 50% of your wealth? That would be an argument some people would make. right? And I think that there's credence to that argument. Of course, you're going from the perspective that you will split up with this person. Hopefully, you're not going to marry them unless you're like more sure. And then some might say, well, you're never sure. That's true. Hey, Francesco, how you doing? All right, regarding pretty good. Okay, so you guys having both be better off. Yeah, just sit down and agree on how the splitting is in writing. Yeah. Oh, thank you, everyone. All right, so Fabio, if I get a high-paying job, I'm going to say, look at me, I'm right. Now buy Chinese VIs. Yes. No, but that's what you should do. You should get a high-paying job and just grift like that. No, or what you do is you utilize money you make from grifting, and then you advertise that money and say, look at me, I'm right because of this. That'd be funny. All right, so it kind of have to be your own judge on whether you need it. Yeah. So that's more like that. Is there stock you and your wife both invest in? Oh, great question. Oh my gosh, I love this. Abby, I know that. I'm trying not to reveal her portfolio, by the way. But I tend to, again, because this is the rule, I tend to, if she invests in it, I don't invest in it because I consider that to be exposure to our nuclear family. So if she's invested in something, I consider the weighting. More recently, should I tell everyone? She's not in here. I'm just thinking to myself. Well, she's been buying Target, but she loves Target as a company. I'll just tell you that. She's been buying Target. There you go. Because Fabio's wife has been buying Target, it is a buy. Target is a complete buy. Call options. Poor man's call options. Everything you can, just buy it. No, I'm kidding. There are websites that you can see salaries in your area for different jobs. I'm guessing that's for someone else's question. All right, so we still why still live in Orlando? Blah, and it moved to Tampa. I don't know what that means, but why don't I move to Tampa? Is that the question? I think I don't move. Well, if it were up to my wife, we'd move to Tampa. But we have our families, and then when the children start to spawn, because how children work. No, I'm kidding. Just like tell everyone, children just spawn out of nowhere. And when they spawn, it'd be good to have the in-laws on both sides kind of helping out. Because again, my wife she's a busy bee. I'm a busy bee. We're both busy bees. I think maybe towards that end, we'll start to consider whether or not she will continue her. But I want her to have like that choice. Like she can like decide, does she want to keep going or does she want to just be a mom? And then if she wants to be a mom, she can be a mom. So that I'm giving you guys a little bit too much personal information there, but that I'm answering your question why we're not in Orlando. We're not in Tampa. We're not in Tampa because of that. Fabio, what are you using to stream this, by the way? I like how the comments keep popping up. It's cool beans. I use that phrase too, cool beans. So there we go. We're going to be the best of friends here. So I'm using StreamYard. I think it actually should be at the top, powered by StreamYard. If it's not, then I don't know what they're doing. They should actually put that up there. It's free advertising every time we use this. But yeah, StreamYard, I might actually end up using Zoom in the future because even though you can kind of see here the green screen software for Zoom, you can see on my jacket. Sorry, not Zoom. StreamYard isn't as good. Zoom's is actually far superior. People actually sleep on how good Zoom is. Zoom Pro is amazing. And there's actually a feature where you can stream to YouTube from Zoom Pro. This is just a lower cost because I don't feel like paying right now, but I think I might end up paying for one of those services. So, but yeah, for now, it's going to be on StreamYard and it's so easy, but even Zoom Pro, it's so easy to send a request to someone. As long as you have Zoom Pro, you're all fine and dandy. And again, this comment thing shows up on Zoom Pro and stuff. I'm hyping up Zoom Pro because I'm long Zoom, I'm totally long Zoom and I want Zoom to go up to 200 million a share. Everyone tomorrow, let's all pump Zoom. What's Zoom's market cap? We got this, guys. All of us right here, we can 100% pump this $35 billion company. We can do it, guys. We can do it. This is the start of something. I feel it. All right. Um, oh, okay. So the thing is, strongman is kind of like the warrior here, fighting this battle. He told me that he advises me to stay out of it because he didn't literally say that, but he put it that the AMC crowd is kind of sketch. And but yeah. So I'll give you my thoughts anyway. Screw it, right? So what are your thoughts on the sus father being on the board of on AMC? Wait a minute. Are you saying sus father or ape father? Uh, like you mean ape father, right? I read ape father with my peripheral vision, and then I looked at it and it says sus father. I don't know if you mean that. Um, target below 170 might be interesting. Yeah, no. She literally, let me be honest. She bought it because the price isn't egregious and she loves the company. She's owned it for a long time. She's just been buying and buying. She's been just buying more recently just because she wants to. It's not anything like that. But yes. Oh, I see down there. I read all the way at the bottom. So I'll bring up your question now. Elemento, thank you for clarifying. Yes, sus father is ape father. Oh, I got something to say to you, Julius. Julius, well, there's something interesting that might occur in the not too distant future if you know about those places. Anyways, we'll get to that in just a second. So, what are your thoughts on sus father being on the board of? Okay, so this is ape father for everyone who doesn't know. Ape father is a YouTuber who primarily focuses on talking about AMC. Let's bring up AMC right here for you guys, and we'll have a little bit of a discussion on it. So AMC Holdings. This is perhaps the opportunity of a lifetime because of the MOAS. I'm just kidding, guys. By the way, just in case. But it'd be funny to take that out of context as a clip. That'd be hilarious. But anyways, we're taking a look at AMC here. The MOAS thesis is based off of this, and I've seen some of his videos because I only know about him actually through Strongman, Personal Finance, and the MOAS is predicated on the thesis that there's a bunch of synthetic shares by hedge funds, or as they call them, the hedgies, and the ape father, who is leader of the ape army, is on a eternal quest or a crusade of sorts, a holy war, so to speak, to eventually eliminate the hedgies in this final battle, which we are kind of all just watching, waiting for this final battle. But yes. Oh, we see. Oh, I didn't even see this. What is this news? Morbius. I gotta go see this movie because I haven't been in the movies in a long time, guys. I haven't been in the movies ever since a lot of the streaming services actually put out their movies on the streaming services. I don't go anymore. And then my friends just come over, and none of us pay for a movie ticket. We just watch it on the streaming service. So it takes a bite out of the box office with 39 million take. That's not that good. I mean, I don't know what the budget was. Anyways, whatever. We know that they bought a gold miner. I don't know what was that about, but yeah, my thoughts on him being on the board. Sure, why not? He brings them a lot of publicity. Probably brings a lot of demand for their stock. Yeah, he's like a representation, amalgamation of what it means to be an AMC shareholder. But yes, those are my thoughts. Gotcha. Yeah, Orlando isn't bad. Orlando is not a bad place. It's a growing place. It's got its nice parts to it. It's no Miami. I don't really like Miami, by the way. Just out of curiosity, I just don't like it. Oh, thank you so much. Okay, thank you for the kind words. And this is what I was talking about, Julius. If you know, then you know. Okay. Julius, I'm actually curious. I don't know if you want to say it here because I know you are Big Four, but which Big Four are you? If you don't want to say here, completely understand because you don't want to share everything on the internet. Your strong in personal finance have inspired to make a YouTube channel. Oh, good. Is your YouTube channel called Gil Rodriguez? I'll take a look at it. My son is the next Warren Buffett. Wait, what happened to the picture? Jeremy's dad. The picture. What happened to the old picture? but yes, your son is the next Warren Buffett. If you want Zoom to reach $200 million per share, I think you need to speak to Jerome Powell. Yeah, well, no. I need to call up my good friend, the president of the United States, and we need to shut down this economy all over again and force everyone to work from home. That will definitely bring it. And then Jerome Powell, then he comes in and then he prints me some tendies. I'm older than you, but I appreciate it. Yes. 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 Yeah. The clarification, though. Yes. Do you think day trading is a bad primary source of income? Are you making money? If so, then no. But if you're not, then no. So, well, as in, if you're not making money, then yes. Sorry. If you're not making money, yes, it's a bad thing. If you are making money, no, it's not a bad thing. You're going to be taxed like as you would like a salary. I mean, you're going to be taxed on the short-term capital gains rate. So there's that. But like, if you're succeeding at it, well, why not? But like, that's the yeah. All right. No, what? StreamYard is there in the top right corner, but I had a messenger chat bubble in that. Oh, yeah. Okay. So they do have it up there. I'd be like, that's they should advertise themselves, man. That's how they get more business. But yeah, I do say so. All right. I've been a follower of this channel since 50 people. Oh, no worries, man. No worries. That was a pleasure. That video was a good one because that one was all those dives into Rocket were a good exploration of a very complicated structure, which I haven't even gotten to Dutch Bros. I did do IBKR, which is another complicated entity, and of course the Chinese companies, right? All those guys. Haven't heard from. Well, I don't know if I'll. Well, I've had some people ask me whether or not I should have him on again, but yeah, well, I didn't even have him on to begin with because he didn't show up to the thing. But I'm not really his target per se. He doesn't really want to speak to me. I don't know why. I'm a nice guy. He thinks I'm a mean person. But yeah, he doesn't really want to talk to me too much. He wants to more talk to Strongman Personal Finance for whatever. AMC is supposed to be at $10,000 a share by tomorrow, according to the filer, and down like quite literally, like unironically, that it's supposed to be at 10,000. I'm sorry, but I had to laugh. And then that is really interesting. I mean, I'll make an announcement soon, but that is really interesting that you're saying this and that you're saying that up top. So I wonder. Hint. This is my YouTube viewing account. I'm gonna make one soon. I'll let you know. Definitely, yeah. I'll take a look. I'm working on getting my mic and set up. All right, so I'm always willing to I mean, with mic quality, I've seen a lot of people be very successful with bad mic quality. I think at the end of the day, if you are passionate, you provide value, I think people will like it, and then that's all you got to do. And then just make sure that you are passionate about it. I mean, that's just me being sentimental about it. I'm on money day trading, then I lost 100K and blew it up my account. I got cocky. I think a lot of people can learn from my mistake. Okay, very good. So if you share mistakes, that can provide a lot of value. This is something I'll show you. Let me pull this up. I think this is actually really, in my opinion, you can disagree with me, but just know if you disagree with me, you're wrong. So just ahead of time, just so everyone understands, like you can, but just know you're absolutely wrong if you are. So let me zoom in. All right. So this is a good way of expressing how people are with the markets, right? So you start the markets, you're like, I know everything. And then you enter the valley of despair. So luckily I had this more or less very early on in my life. And I had the moment of, I think I told everyone like in high school, the story of like, I played this game of simulation or whatever. And I thought I was like the top shit because I won the game by accident. Like if we're being honest with ourselves, won by complete accident, had no idea that I was buying a hazmat suit company that was going to win like the contract with fake money. So I didn't actually even make any money, just so everyone knows. Like I wish, but whatever. And then so I'm top shit. Then I found out this is peak of Mount Stupid. We fall into the valley of despair where we're like, oh gosh, we suck. And then you gotta learn, and you never will regain the same level of confidence, which is kind of poetic. But yeah, slope of enlightenment, where you start to learn and learn and learn, and then the plateau of sustainability, which is where you want to get to. But yeah, that's kind of reminds me of that. Channel, you could benefit from a second channel dedicated to live streams. The YouTube algorithms hates channel that mix lives and non-live videos. I did not know that. All right, maybe I do, and I call it Capital Mindset Live. Maybe I do that. So I did not even know that, but yes, Chillers is sus. Although I remember Wednesdays at Chillers are like $1. Okay, so I mean, back in my younger days, which wasn't that long ago, I did actually frequent Chillers. I wonder if we were there together. But yes, again, according to what you said before, there's that's a funny coincidence. According to Graham Stephan, okay, I'll take a look at that. Thank you, Jeremy Stad. Thank you. I've done it. I have become a grifter. Bask in my glory. I have achieved enlightenment. Thank you. But thank you, Jeremy's dad. Much appreciated. And no worries. It was a fun video to make. All right. So the stats say 90% of day traders lose money. From your experience, is this true? Do you think day trading is a viable way to make money personally? That's why I said what I said. And so I said, if you're making money, go for it. If you're not making money, don't go for it. Or, you got to be honest with yourself. I'll say this. Will there be some people that are successful? Absolutely. Will most people be? No. Most people will not be. So I don't bother with it because I focus on producing income in other ways. And then I have my investments that scale my income. So like, you take the capital and you don't know what to do with it. You invest it and then you can scale, right? That's investing after you reach a certain point actually allows you to achieve that scaling. So day trading, you're going to have to be focused a lot on, and it's waste a lot of time. I don't know what you're doing as your day job, but if your day job is producing you X, focus on improving that. And then as long as, let's say, because I guess some people might say, well, you only day trade in the morning and then you stop. Okay, whatever. But like, let's say you've got to think about the opportunity cost, and then maybe you focus on maybe different passive investments. Or like, for example, I'm pretty passive even with my active investing. I don't really make too many changes. Preferably I like to buy and just like kind of just let them sit and just not do anything. Like today, like I said, I didn't look at my positions. I don't know what happened. I had to look it up right here live. I was like, what did ConocoPhillips do today? I have no idea. I don't look at stocks all day. I'll look at stocks, make my analysis, and then buy it, and I'll just wait. So, was this now it was real money? Because there's an inside joke on this live stream for those of you who are new. If you type in, you can super chat me by typing in $50 followed by 6 zeros, and it's totally real money. You just try it, and then I receive it, and then it funds my drug empire, right? Which is, well, actually, my drug empire is with my course money. So I fund that with my course money. The money I get here when you type in, again, please, $50 with 7. Sorry. Yeah, make it 7 zeros. Why not? While we're at it, make it 7 zeros. It funds this hallway of despair, right? Again, because remember that, oh, wait, I got to point at, that's my bathroom over there. And you can walk down, and I just make that eye contact with you. All right. So, I almost have the time I deviated from my strategy and tried to trade. Day trade, have lost money, and I am the poster child for stick to what you know. Yeah, but nothing wrong with that. No worries about being afraid. An MP of 90% of chance of catching the STD with a woman when you take your chances. That's a really good way of putting it. Qs and SPY. Yeah, that's a good way. I might make a small account again one day just to see. You can have it as a fun account. There's nothing wrong with that. I'd say like a responsible way, or some might say a responsible way of doing this would be to have most of your assets allocated to lower volatility instruments and stuff that, and I say lower volatility. Volatility is because of the psychology. But let's say investments that you're not going to worry about on a day to day, and then a small piece of the portfolio can be dedicated towards day trading if you really want to do it. Like if you're like, I have to do it, that might be a more responsible way of doing it. There's nothing wrong with that. Say that no longer you day trade, the more likely it is that you win/lose turns into a negative. Yes, then that's the thing. That's the thing. Yep. Yep. Most people will know. Now I am focused on my income and growing my income. Exactly. And buying index funds. Perfect. Exactly. Maybe I'll buy stock like Target or gas stocks, defense stocks when I see a good opportunity. Exactly. Like, well, whatever assets you deem to be good. And just real quick, I have this other super chat here. So as you can see here, Julius Caesar has provided me with $1,169,420.45. And 45 cents stands for the 45th president of the United States. I don't know if that's what he meant. Just joking. All right. So Francesco Di Lollo, love the last name, buddy. As someone who has never invested before, where do you recommend I start? Okay. So you got to learn the basics. And for you, that would be very easy. You just have to text me. So yes, you gotta learn the basics. You gotta learn to walk before you run, get your exposure. I think for the majority of people, they should be invested if they don't want to, think about it, in broadly diversified low cost index funds, and then just dollar cost average forever. I'm very bullish in a company called InMode, IMMD. So bullish, I have 100K in it. It's about 20% of my investment portfolio. I am crazy for having that much in one. Okay, so the thing is, if you know more about it than me, not necessarily. I have 20%, over 20% of my portfolio in Alphabet. I don't think I'm crazy. Some people might. I don't think I'm crazy. But in your case, you may be, and I think this is the one you requested to me, right? I think you requested this one to me. You may or may not have requested this one to me. Let me actually take a quick look into the list. Okay, Google just gave me like a loading issue. It was like, hey, I don't know what you're talking about. Yes, this one is on the list. Yeah, IMMD. I'm gonna actually type it up here and put it in the top now and erase it down here in the bottom. Put it more to the top. Now you're like the second person who's actually requested this. So I'll take a look at that, and then you're gonna probably love that video since you have 20% of your net worth in it. And making sure it's not. I have another one, INMD. That's another ticker. Making sure that wasn't a typo, by the way. I wish I just put my, and I guess I will continue. Tactical allocation wise, could long-term bonds be good soon a buying opportunity? Sentiment is extremely bearish, plus Fed actions and a war could lead to deceleration in growth. Yes, they could be. There's a lot of people who are saying that is a viable strategy right now. But that's kind of like timing macro trends, but not my forte. I have a gambling personality, unfortunately, and that's why I always need a small trading account. Yeah. Okay. So there you go. If you're honest with yourself and you know your limitations, absolutely abide by those limitations. So in that instance, identifying I have X problem, I shouldn't be doing X, is on the right path. That's on the right path right there. I had so many random people at work and in my personal life try to show crypto trading to me. It's like a cult. It's creepy. I like the technology, but there's something very fishy going on with it. I'd say that the vast majority, I made a video, and it's the only video I have on crypto, where I express a philosophical conversation to be had about why it might succeed or why we shouldn't be surprised if one of them succeeds. And it has to do with the whole conversation about money and stuff. I don't have any crypto assets. The only exposure I have to crypto is through Overstock, which is kind of like a proxy to crypto, but a proxy to blockchain technology, right? Because they're working on, allowing everyone to own assets and buy and sell assets on the blockchain rather than traditional technology. So I think that's good. And they're also helping governments actually switch over to digital currencies. So then that's also good. But yes, I can agree. Like, this is where I'll say the majority, and I say this in that one video the only video I made about crypto so far. that the fishiness going on with it is that most of it's going to go bankrupt, right? Not bankrupt, but to zero, because a lot of them are worthless in every sense of the word. I think, for example, if we want to get really down to it, I think that a currency needs neutrality. And a lot of these cryptos don't really have neutrality. They have implied neutrality. They have neutrality currently or presently, but there's still an ability for there to be removed neutrality from it. Because at the end of the day, you can kind of update the versions or the variations, and you got to be very careful with that. Those kinds of cryptos have no chance of ever becoming real currency, in my opinion. I could be wrong, in my opinion, but yeah, that's more or less just my thoughts on that. And yeah, you won't see the only videos you'll see later on crypto on this channel will be kind of explaining the different blockchains. And again, from there, after explaining all the blockchains, for example, we have the Anchor protocol that I actually got to get over. I actually have to show an image because it can get kind of confusing explaining what the Anchor protocol is. So using an image of like a flow chart would be very useful for that instance. But after that, then I'll get into actually the crypto exchanges, and then that can kind of, it's all going to be like one series. So that way we go over what these different assets are. Maybe not all of them, because I think that would be overkill, but enough of them where we can kind of see that there are differentiations, and to give viewers an idea that maybe they should go out and learn, and kind of show them how you can learn it. And, you know, simply by reading white papers and a bunch of other things, but mainly the white papers. And then we can evaluate these crypto exchanges, which were requested. Not that I would buy them, but they were requested, and I treat my subscriber request as basically like a customer would request something, so I'm going to do it. Wow. Okay, so you're my first. I don't know if I have any other professional poker players, but that's really interesting. You would destroy me in poker. I don't have a poker face. So if you were to invest in an index fund, do you think VT or SPY would be better for 30 plus years? Okay, so here's the thing. If blindly looking at it, VT, because the thing is, VT is the reason why VT is kind of over the longer term going to be maybe better for most people is the volatility aspect. You're invested in everything, so the volatility is whatever the entirety of the market is, an entirety quite literally in the globe. The SPY is concentration in the country. Then there are arguments to be said that the SPY is a global ETF still, because American companies are global companies. Absolutely agree with that too. Just that we can't ignore that there is sometimes delineation between the domestic market of the United States and foreign markets, even though the American companies technically are global companies. So VT would be less volatile, may not outperform the SPY. Let's be very clear. It may not outperform it. But it's about the volatility aspect, depending on what what your goals are. Stress-free, just don't even think about it. That's VT. SPY, you got to understand what you're getting yourself into. You are diversifying within the United States, and only within the top 500 of the United States, instead of doing VTI, which is the entirety of the United States. All right, so for the people who are asking about getting started investing, I think index fund comment was spot on, Fabio. I have okay, so I think what's Jack Bogle's book? I always forget his book. Common Sense. I always forget his book. Why do I always forget the name of his book? Jack Bogle. Yeah, the Little Book of Common Sense Investing. That's the one. All right. So, Little Book of Common Sense Investing is a good one for starters. Intelligent Investor. I mentioned that one, but that's later down the line. I think that's not in the beginning. Wait, and then 100 to 1 is a good book to read. Also, a little bit more down the line. Another good book. Not Security Analysis. That's more of a textbook. Uncommon Stocks, Uncommon Profits. Peter Lynch's book. Yeah, those are some thoughts I just throw out there. Yeah. Oh, just so everyone knows, the reason why sometimes you comment and I say something is because there is technically a 20-second delay, I believe, between what I say and when your comments come in. So what you're seeing is always 20 seconds before. All right. So I'd say if you want to get into individual stocks, my one recommendation would be Good Cheap Stocks by Kenneth Jeriff Marshall. Yeah, that's a good one. There may be tons of lots of reading in this way. Yes, absolutely. Fabio, I'm not watching live, but maybe asking viewers to put your name in front of questions directed at you would help you filter through which comments you need to highlight. Yes, that would be good. I know that like very large channels, they only take, for example, super chats. I don't want to do that. But no, I think that actually would help. If everyone from now on, I'll make that a rule. I'll make that announcement rule all the time. I'll say questions, please put my name, and then that would actually help a lot. Thank you, Martin. That's a very good suggestion. Very good suggestion, because that way I avoid conversations between each other. All right. So book recommendations is too advanced. Yeah, you got to be careful with book recommendations being a little bit too advanced and not. Dude, I think we met at Chillers. Remember when Lafufu's stepsister was dancing in the bar? That is so funny. Yeah, no, man. Oh, that'd be so funny if we ever met at Chillers for real, though. All right. I think VT would have less volatility. Yes, I think so. And also have less likelihood of a lost decade. Yeah, because that's actually put really well. I think you'd have less of a probability of having a lost decade. And that's why, like, when some people like criticize strongman personal finance for being quote unquote a VT shill, I say that with all the most love and respect to the guy, because he's not. He's what? How do I say this? He's the reason why he argues for VT, and it doesn't, like, some people don't get it, is exactly this, right? And he does say it, I think, and we can't say he should say it more, because he does say it a lot. And the argument's pretty solid in terms of like what it is your focus should be on, right? He claims that he wants his focus, and I say claims not like, oh, it's a claim. No. Like he says his focus wants to be on producing income, and then he's going to put his money to work in an index fund such as VT, where he doesn't have to think about it. And so the mental power that it takes him to invest is quite literally nothing. And that's a benefit. That's a quality of life improvement. And then all his mental capacity can go towards one thing, improving his income. And then that's kind of forms a flywheel effect. Most people are going to find success in that way. And that actually comes from both his book, by the way, which, I'm going to also be nice and say his book is also pretty good for a beginner investor too. But investing from common sense, a lot of those ideas are expressed in there, as well as his book, which I think is Stop Being a Broke Loser. So thoughts on the metaverse? I love this question. Do you see any value in so-called metaverse stocks such as Unity, Roblox? Would like to see you do a video on the recent SPAC called Matterport? Heck, why not? Why not? Matterport, why not? I've done others. Okay, added it to the list. All right, so in general, metaverse stocks. Okay, the metaverse, there's the meme metaverse and there's the legit metaverse. The legit metaverse is going to be like a new version of the internet, business to business transactions, stuff like that. I think that is 100% here. The meme metaverse, like Ready Player One, that a lot of people think about, we'll see. Roblox is interesting in what it's doing, but valuation, Unity, same thing. Matterport, I'd have to take a look. I own company Meta, and I also own Dropbox. Those are my exposures to the metaverse. I also own Adobe. Adobe's doing stuff in the metaverse. I also own Alphabet, which I presume is doing stuff in the metaverse. So yes. And then I see this was a correction to me not remembering what the name of the video was. SP 500, 508 stocks. The 8 remaining stocks are TCF, NAT, Purple, SEC, Oatly. I love this. These are underrated comments, man. Can you do a video on ASML? Yes, that's actually, I think that's on the list here. ASML. I'm going to type it more towards the top so I can do it sooner. I'm probably going to take like a crazy day off one of these days. I'm off on Thursday, so I can go on Thursday and just go absolutely nuts with these videos. I can probably get out a bunch of them. Let me also highlight it. Yeah, okay. Yeah. All right, cool. So we'll definitely do that one. All right, guys. Meet Kevin is an idiot compared. Oh, well, thank you. But yes, thank you. How does he fool people into thinking he's smart? His subscriber count makes him look credible, unfortunately. Well, subscriber count makes you more right. So the more subscribers I get, the more right I become. So think of it that way. I'm growing in correctness each and every day. That's how you actually have to think about it. I'm becoming more right. Okay. So I prefer to become more right than become more wrong. Okay. Nike will be a big player in the metaverse. Will it actually? I mean, okay, maybe the branding, because what are they doing in the metaverse? You know what? You intrigued me a lot there, Julius. But yeah, you intrigued me a lot. Julius, did you currently still work in Big Four, or when you left KPMG, you left out of public accounting? You don't have to answer that question, by the way. Don't If you don't want to answer those questions, don't answer them. Ignore them entirely, actually. Just out of curiosity, general curiosity. All right. One more piece of information. I did see that Biden, before we close off, Biden is saying he's going to close off, or not close off, extend the deadline for the student loan moratorium, or whatever it was called. So I'm just trying to make sure I covered all the different news pieces today. Yeah, we talked about Howard Schultz in the beginning. We talked about the airlines. We talked about, I think we talked about everything. Talked about now, just mentioned the Biden thing. The Federal Reserve, I mentioned that, the lady or whatever. But yes. You know what? I figured, because yes. I figured. Hey, no worries, no worries. Thank you for being a good subscriber, watching my videos, enjoying the videos, stuff like that. That's how I enjoy it. Proposal, okay. What is this? Okay. All right, guys. On that note, I'm going to close off tonight. It's been a wonderful stream. I enjoyed this stream as always. Like talking to you guys, and closing off just before 2 hours. You left the public accounting. Yeah. All right, guys. Hope you guys have a great one, and I'll see you guys in the next one. Bye.